Hello, my name is Jan Freitag, National Director for Hospitality Analytics for the CoStar Group, and today I want to discuss with you the March results that STR just released. With vaccinations firmly underway and almost 3 million doses being delivered every day, GDP growth roared back in the first quarter. Oxford Economics tells us that gross domestic product grew by 9%, and that of course has very positive implications for the American travel industry. Because in March 2019 the pandemic took hold in the US and around the world, the percent change for RevPAR for this March was very positive and was reported at around 34%. The percent changes going forward are going to be even more positive and maybe even a little bit hard to comprehend. For example, for the week ending April the 10th, RevPAR in the US was up 311%. Going forward, STR will not only show the percent changes year over year, but also the percent changes compared to the same month in 2019. For most of our clients, 2019 is considered to be a quote-unquote normal year, although I like to add always that 2019 was indeed the single best year that the US hotel industry had ever reported in terms of room demand and occupancy. But this is what our clients want, so that is what we will report on. Here we are doing this for the first quarter data, and a slightly different picture emerges. What you see is that the changes compared to 2019 were negative, but slightly less so than in the prior months. In other words, the recovery is firmly underway in the US lodging industry. The occupancy chart paints a very similar picture. A year ago, occupancy declined rapidly, and this year the occupancy, comparatively speaking, is much stronger. But the results are still well below the long-run average that we show here in the gray line. And the expectation is that occupancy will continue to solidify throughout the summer with ongoing leisure demand, and then hopefully gets a boost as corporate group travel demand resumes post-Labor Day. The total US figures are of course just an average, and today I want to dig a little bit into the performance by location type. STR breaks out locations into 6 separate classes, and we can now talk a little bit more about performance of downtown urban hotels versus highway hotels versus resort hotels and so forth. On this slide you can see that there are a wide variety of results. Specifically, the resort, interstate and suburban location types have had a really strong beginning into 2021. This is driven up by leisure travelers which took to the roads and especially lifted occupancies in the interstate and roadside hotels. Not surprisingly, the large urban areas saw relatively few travelers as corporate transient and corporate group demand lagged the consumer-driven demand. This then translated into much lower occupancy in urban locations, and you can see that even in March, the urban location occupancy still lagged quite a bit behind the better performing location types. It is worth pointing out that the occupancy calculation that we're showing here is the standard occupancy calculation, which excludes the temporarily closed properties. And that number really doesn't matter to most of the location types. However, for urban hotels, the temporarily closed room count is material, as roughly 11% of rooms are still offline. What this implies then is that when we take into consideration the total room inventory, so including the temporary closed rooms, and then calculate the occupancy, the value drops even further. In March, the TRI occupancy, total room inventory occupancy, was about 5 points lower. So the standard methodology shows an occupancy of 46%, the total room inventory occupancy stood at 41%. Lack of corporate demand has certainly impacted valuations for urban and upper upscale hotels. CoStar News published an article that stated that in the first quarter of 2019, 1.3% of assets that were traded were distressed. That number has now skyrocketed for the first quarter of 2021 to 18%. One of those distressed sales was the sale of the Hyatt Regency in Austin. Edinburgh Management sold the property to Host Hotels and Resorts for $161 million. Host Hotels and Resorts suggested in a press release that that sales price actually reflected a 20 to 25% discount to pre-COVID-19 pricing. Of course, the other side can be true as well. The sale of the Mountain Chalet in Aspen for $68 million, or just over $1 million per room, showed that investors are eager to participate in the expected return of the high-end luxury leisure traveler. We fully expect that with pent-up savings a strong stock market, and continued high employment rates for knowledge workers, that luxury properties will continue to do well and will continue to trade at multiples that are not impacted by the pandemic. Going forward, we expect performance results to be much, much stronger than they were in 2020 and, well, not quite as good as they were in 2019. STR will release its latest forecast based on the first quarter results later on at the NYU Hotel Investment Conference, and I will certainly comment on that in a video just like this. It will be interesting to note if the strong leisure demand added to the lots of vaccinations that spur corporate transient demand will actually get STR to revise its forecast for this and for next year upward. So stay tuned for that. In terms of asset pricing, we do not expect a whole lot of activity just because the data is still going to be a little bit hard to parse for buyers and sellers. But as the Aspen deal showed that we just discussed, there certainly is a lot of interest in high-end luxury assets. Finally, a quick call out to two articles I wrote a few weeks ago. When talking to industry participants, I have the distinct feeling that for some, the hotel recovery glass was half full, whereas for others it was decidedly half empty. So here's a laundry list of things that could go well or that could maybe derail the industry again. So have a look at the bull and the bear market case in the CoStar platform. But just to be clear, we are firmly in the bull camp. Thank you so much for watching. Until next time, I wish you well. I wish you health.